So now we are moving on to classification of goods and types of customs duty. In this classification, so we have general interpretative rules and various customs duties payable, etc. You can see here first one, that is general interpretative rules or rules for interpretation of tariff. For what purpose these rules are? For the purpose of classification. Classification means what? Identifying the imported product or exported product in the appropriate heading in the tariff is known as classification. Why we need to classify? So that only we know what is the rate of duty that is applicable for that product, and we will know whether a product is exempted or not, because usually exemption notifications when they are giving, they will tell a product falling under this heading is exempted. So if the imported product is falling under that heading, then we don't have to pay customs duty, otherwise we need to pay customs duty on that product. So for that reason the classification plays a key role, and most of the times it will be easy to classify as to imported goods, exported goods in the tariff, but sometimes it will be difficult. For that purpose we have general interpretative rules. In that, rule number 1 says that the titles are for reference, means don't classify based on just the headings, etc. and all. So read the section notes and chapter notes, highlight section notes and chapter notes. So section notes and chapter notes are relevant for the purpose of classification. Okay, so we need to read what is that? Relevant section notes and chapter notes. Okay, relevant section notes and chapter notes are relevant. Then rule 2a. Rule 2a says any reference to complete goods also includes incomplete goods or unfinished goods. For example, a car which is not fitted with tires, which is imported, will also be treated like car only, but not treated like parts of the car. It is treated like car import. So that is complete goods includes incomplete or unfinished goods. Then 2b says any reference to a material includes combination of that material with other material. For example, if I am importing an article which is made up of partly gold and partly copper, so even then it will be classified as gold and gold only, but it will not be classified as split and classify, not possible. So therefore gold jewelry imported will be classified as gold only, even though it contains copper. So any reference to a material includes combination of that material with other material. Then whenever there are two headings, one specific heading and one general heading, always we need to prefer specific heading over general heading. For example, so electric shavers which are being imported, there are two headings. One is like specific heading, shavers and hair clippers. Another heading is there, electromechanical self appliance, like that one, another heading is there. But this electromechanical self appliance is actually a kind of general heading, whereas shavers and hair clippers is a specific heading for the electric shaver that is imported. So that's why always prefer specific heading over general heading. Then rule 3b talks about classification as per essential character. So whenever we are importing composite goods means a particular product is a composite of multiple things, means it has lot of parts, and each and every part will come under different heading. For example, a geometry box which is imported, so we'll have different headings for each and every article. And where we need to classify, you see what is the essential character there? Drawing instrument. So we need to classify it under drawing instruments, that is this. So classification based on essential character. It's not like multiple goods are imported. If multiple goods are imported, we have set of articles case. So that is, for example, we are importing a camera, we are importing a lens, or we are importing tripod, etc. These kind of goods, then we have anyhow a separate section, that is section 19. I am not talking about that. We are importing one article, but that article inside in the package we have multiple components. Okay, so for example, we are importing smartphone. That smartphone will have a cable, we have a case, will have a smartphone, and will have a charger, adapter, etc. and all. But what is the essential character there? Smartphone. So we will classify it as smartphone, that category. Okay, not that we are importing multiple articles, we are importing only one article which has multiple components. Okay, then next, if both the headings are specific, then we need to see latter the better. So that is, for example, we are importing a vehicle which can carry both goods and passengers. Then in that case, we have two different headings, one for carriage of goods, one for carriage of passengers. So which comes last in the numerical order, that should be taken. That is the latter the better. Then rule 4 talks about akin goods. Akin goods means similar goods. So whenever we don't identify the exact product, then in that case we need to see the similar article related to that. Example, so we have this sun microfilms which are used in car glass to paste it, so that should be compared with Venetian blinds, that is blinds used for protecting the sun glare, that blinds and curtains we use So there it should be classified. So that is this akin goods, that is similar goods. Then packing containers and packing materials. If it is a specific packing material which is used only for that product, it should be classified along with that product. For example, jewelry boxes can be classified only under jewelry, because jewelry boxes cannot be used for any other purposes. So it should be classified as jewelry imported only. Whereas in case if it is a normal plastic container or metal container, you check whether any separate heading is there for that. Under that separate heading it will be classified. Suppose if there is no separate heading, then we don't have to pay customs duty with respect to that. That is this. Packing containers and packing materials can be classified along with the main article which are sold. If it is general packing material, then classified under separate heading. Then rule 6 talks about goods can be compared for classification at the same level. So same level, which means that headings or subheadings can be compared with same level. Heading cannot be compared with subheading. Heading and heading, subheading and subheading, like that same level only it can be compared. So these are some rules. And rule number, so it's like not required, but in case in MCQ somewhere if they are connecting, you should be knowing for that purpose. And you try to remember these points, because these points again will be tested in MCQ purpose only. Next, what are the various customs duties? All the sections which we are referring to is of Customs Tariff Act in this chapter, except section 19, which is articles liable to different rates. Let's complete that and we will come back to this. So we are importing multiple articles, and in case when we are importing set of articles and it is like a package we are importing, so frequently bought together, like that. Okay, so when you are buying one product on Amazon, it will say frequently bought together, like that. So we will combine it and we will import, like that. As a package we are importing, what should be taken as the rate? This is like similar to our composite supply, mixed supply, which is there in GST. Import of set of articles, first we need to check, and this section is section 19 of Customs Act, not Customs Tariff Act. This is section 19 of Customs Act 1962. So if it is article liable to ad valorem duty, ad valorem duty means what? When duty is payable as a percentage of value. I already gave that below. Customs duty payable as a percentage of value, that is known as ad valorem duty. What is the opposite of ad valorem duty? Specific duty method means customs duty payable on the basis of units of measurement. For example, on import of marble slabs, we need to pay based on square feet. On import of TVs, we need to pay on inches, number of inches, like that. Depending upon the product, we need to pay customs duty on the basis of units of measurement, that is known as specific duty method. Whereas ad valorem is on the basis of value, a percentage of value, that is ad valorem. And suppose if it is ad valorem and it is liable to same rate, when it is liable to same rate, we will pay the duty at the same rate, no issue, no problem, because all the goods are at the same rate. Say 10%, 10%, 10%, we will pay 10%. Suppose if it is liable to duty at different rates means what we need to see, what they are telling is that you see the highest rate, but we have exceptions to this. Actually prima facie highest rate, but there are some exceptions. Exception number 1, that is, if the values are ascertainable separately, then you pay accordingly. So separate values ascertainable, you pay accordingly based on separate values. Separate value not ascertainable, single value, sorry, second exception, single value only, but it is like a accessory compulsorily supplied along with the main article, then whatever is the rate of main article, that should be taken like composite supply. Principal supply we will take now, like that. Compulsorily supplied along with the main article and separate price not available, entire consignment chargeable to duty at the rate applicable to the main article. Then capable of supply separately but separate price not available, that's what. Balancing cases, we need to take the highest rate. So just 3 points you need to remember: separate value ascertainable separately, separate value not ascertainable, then compulsory accessory, then in that case principal supply rate, that is main article rate. In all other cases it will be highest rate. That is this. And in this, suppose if there is one article which is not liable to duty, that will also get dutiable accordingly. For example, we have 3 products A, B, C. A is dutiable at 12%, B is dutiable at 5%, and C is non-dutiable, and it is imported for a single price. Then in that case, separate value not ascertainable and it is not compulsory accessory, so highest rate. What is highest rate? 12%. When we take 12%, even that non-dutiable article also is getting dutiable. Got it? So shall be chargeable to duty. Non-dutiable articles also shall be chargeable to duty at the rate applicable to the reference to the value, that is like this. Whatever value like this, that will be taken even for not liable to duty. Then in that case, what is better? It is better to have the separate values. When we have separate values, non-dutiable article we don't have to pay duty. Then coming back to this, what are the various customs duties that we have? So these are the usual customs duties, that is basic customs duty, social welfare surcharge. Basic customs duty, we have again two types of basic customs duty. One is standard rate and preferential rate. Standard rate means usually whenever you are importing from any country, standard rate will be applicable, whereas preferential rate will be applicable in case of import from some countries with which India is having trade agreement. That will be given in the question itself and you go by the question itself. And so applicable rate given in the question on assessable value under section 14 of Customs Act. So first we need to determine the value, on that value we need to multiply this rate. Then social welfare surcharge. Always this will be payable at the rate of 10% of basic customs duty, whether it is given in the question or not given in the question, we need to go by this only always. Then IGST and GST compensations, it will be given in the question itself, only when it is given in question you take, otherwise not required. And IGST will be at the rate notified, maybe 18%, 12%, etc. And compensation is also at the rate notified, but on what it should be computed. Remember, while computing IGST and GST compensations, all customs duties we need to include because of section 15(2)(a). Section 15 subsection 2 clause A of CGST Act says that all taxes, duties and cess by whatever name called other than GST should be included in the value. Due to that reason, we add everything and finally we need to compute IGST and GST compensation cess. While computing GST compensations, whether IGST needs to be included? No. So both will be computed on the same value. Remember, here cess is not computed on tax, cess is computed on value only. So by mistake, like your HEC, health and education cess, don't put it here and don't compute this compensation cess on the GST. Gone. Okay, gone. Entire answer gone. Better luck next time like that. Okay. So GST rate in force on what? Same. Assessable value plus all customs duties. Next. And also here rounded off will be 1 rupee, not 10 rupees. 1 rupee, 1 rupee. So too much of DT impact will come in IDT, but 1 rupee only, rounded off to nearest 1 rupee, both GST as well as customs. Don't round off to 10 rupees. Next, see note 1. In the past, on imports, we used to have countervailing duty under 3(1) in order to counterbalance the excise duty, SAD to counterbalance the sales tax. However, now on account of GST, its applicability is limited only to few goods. And what are those few goods on which this CVD and SAD will be even applicable? Today it is applicable. For that, we need to understand, what are the goods on which this will be applicable. So you tell me what are the goods on which this will be applicable. First, whenever there is alcoholic liquor for human consumption, take page number 234. Whenever there is alcoholic liquor for human consumption, we need to pay excise duty. If it is manufactured in India, we need to pay excise duty. Even today, after implementation of GST, we need to pay excise duty and we need to pay CST and VAT. And excise duty is subsumed into GST. So in the place of excise duty, so we should be having GST, correct or not? But this is which excise duty we need to pay on alcoholic liquor for human consumption? State excise duty. So but state excise duty not subsumed into GST, only central excise duty subsumed in GST. So that's the reason why today, even though there is GST, but on import of alcohol we need to pay CVD. Then sir, CST VAT means we need to pay SAD, but no, SAD is exempted. So which means CVD is applicable, only CVD is applicable on import of liquor. Are we importing liquor? N number of brands we are importing, okay, Jack Daniels, Antiquity, Old Monk, Napoleon, etc. All these are imported, on that we need to pay CVD. And locally manufactured, anyhow state excise duty in CST and VAT is payable, not out of experience, out of general knowledge. Then petroleum products. Petroleum products, we have 5 petroleum products. What are they? Crude oil, petrol, diesel, aviation turbine fuel and natural gas. Which diesel? High speed diesel or light diesel? High speed diesel, okay. And present on manufacture we need to pay excise duty. Which excise duty? This is central excise duty or state excise duty? Central excise duty. But central excise duty is even today levied, yes, on petroleum products. So due to that reason, CVD is there on import, CST and VAT. So for that we have SAD. Then tobacco and tobacco products. On tobacco and tobacco products we have special case, that is we need to pay central excise duty as well as GST. So therefore, as there is central excise duty, parallelly we have CVD. As there is GST, we have parallelly IGST. This is in case of domestic, that is in case of import. Then all other goods. On all other goods, domestic we have only GST. So on import we will have only IGST. From this, what is the conclusion? So what are the goods for which CVD is applicable? So CVD is applicable to only 3 goods, correct? CVD is applicable only for 3 goods. What are the 3 goods for which CVD is applicable? alcoholic liquor, petroleum products, alcoholic liquor, then number 2 petroleum products, and number 3 tobacco and tobacco products. So for these 3, CVD is applicable. Then SAD applicable to. SAD is applicable to. What are the goods for which SAD will be applicable? Petroleum products. Only one. Petroleum products. So whenever you see in the question these goods, then only you apply CVD, SAD. Otherwise, we don't have to apply CVD and SAD. Rate and all will be given in the question itself. So that is this part, and therefore you understood this point as to what are the goods for which this is applicable, etc. Note 1 and note 2. In case of export, only basic customs duty is payable if exports are chargeable to duty. Social welfare surcharge, no. Social welfare surcharge not applicable on export, no additional customs duty on export. Only this. What about IGST? Depends upon the option that you choose. Export upon payment of IGST or export without payment of IGST. But remember, whenever you pay customs duty on export, definitely it is option 1 only, that is pay IGST and get the refund. Because when you export without payment of customs duty only, you will get option 2. Export upon payment of customs duty, option 2 is not possible. What is option 1? Option 2. Option 1, that is in case of 0 rated supplies under GST. Option 1, pay IGST and get refund of gross IGST. Option 2, export without payment of IGST under bond or LUT and get refund of ITC with respect to inputs and input services. But one of the disadvantage of option 2 is that, like if you are exporting goods upon payment of customs duty, option 2 not possible. You need to go for option 1, means you need to pay IGST, and that IGST paid only you should get as a refund. Okay, so that's what here. In case of export, only basic customs duty is applicable. If exports are chargeable to duty, then under GST only option 1. Under GST only option 1. Only option 1. Okay. Next, note 3. In case of warehoused goods sold by way of transfer of warehouse receipt. Generally, what will happen, as soon as the goods are imported, those goods are imported and kept in a warehouse without payment of customs duty, and we get a warehouse receipt. That warehouse receipt we can transfer to some other person. When we transfer it to some other person, under GST 7 subsection 2 read with schedule 3, it is excluded from supply. Sale of warehoused goods is excluded from supply. For example, I am importing for $10,000, I kept in the warehouse without payment of duty, and now I sold it to you by way of transfer of document to title for $12,000. Now on $12,000 I don't have to pay GST because it is excluded from supply. But for the purpose of customs, who will be treated as importer? The original importer or the subsequent buyer? The subsequent buyer will be treated as the importer, and the subsequent buyer should pay the customs duty on what? 10,000 or 12,000? 10,000. 10,000, not on 12,000. 10,000. Customs duty payable on 10,000. So $10,000, the original import price only should be taken as the assessable value. Then in which case, sir, $12,000 should be taken high seas. In case of high seas, when I transfer the document to title, then you need to take the price at which you purchased from me as the value for payment of customs duty. But in case of warehoused goods, it is the price at which the original importer has imported. Then for the purpose of IGST, it will change. What is that for the purpose of IGST? You need to compare between what is the regular value for payment of IGST or the transaction value at which you have purchased from me, that is $12,000, whichever is higher. And on that customs duty payable, you can see this. In case of warehoused goods sold by way of transfer of warehouse receipt, IGST and a custom shall be computed on A, assessable value, basic customs duty, social welfare surcharge, etc., or sale value of such warehouse receipt, whichever is higher. For example, let's try to say this with the help of an example. So say this. First, I have imported the goods. Same example I am taking. Import, original import price. Original import price is $10,000. Original import price is $10,000, and sale price of warehoused goods. Sale price of warehoused goods. Sale price of warehoused goods is say $12,000, and we have basic customs duty. We have basic customs duty, that basic customs duty at the rate of 10%, social welfare surcharge at the rate of 10% and IGST at the rate of 12%. Now, what should be taken as the customs duty? And say Mr. A imported and transferred documents to Mr. B. Now, who will be called as importer? Mr. B. So, what is the customs duty? Payable by Mr. B. What is the customs duty payable by Mr. B? So, Mr. B only will be taken as an importer in this case. So, first we need to see assessable value. What should be taken as the assessable value? Assessable value will be taken as $10,000 only. It is not $12,000, $10,000. As this computation fully I am doing in dollars for the purpose of understanding it. Now, we need to take basic customs duty. So, basic customs duty at the rate of 10% on assessable value. So, that will be $1,000. Everything is rupees in like currency in dollars, and thereafter social welfare surcharge should be taken at the rate of 10% on basic customs duty. That will be $100 will be social welfare surcharge, and we have CVD, but we do not have CVD etc. But if it is there, that should be taken. Thereafter, finally, we need to compute IGST, and we need to add additional custom duties etc. if we have in the question. Otherwise, we do not have to add. So, IGST needs to be computed. IGST at the rate of 12% on. Before that, how many of you are watching, like attending IDT for the first time? Definitely you will find it difficult. Okay, be prepared. Don't scold my family members and all. Okay, so what can I do? I can't do anything with respect to that. Because only a student who has learned the subject will be able to understand whatever I am speaking. Otherwise, everything will be like a bouncer only. Okay, and you don't know which ball it is coming, and for that reason, fine. So, IGST at the rate of 12% on what? 12% on what? It should be computed on what? So, assessable value, basic customs duty. So, there are two things. This is warehoused goods. This is warehoused goods. First, Mr. A has imported the goods and he deposited in the warehouse, and thereafter it has been sold to Mr. B. So, therefore, it is not actually sale by A to B documents like or goods, documents, not goods. If goods are sold, it would have been different, but documents are sold. As documents are sold only, Mr. B will become the importer. Means who will file the bill of entry, ex-bond bill of entry? Definitely Mr. B only will file ex-bond bill of entry, file ex-bond bill of entry for home consumption. Okay, that's why he need to do the computation. In that case, the regular way we need to take. What is the regular way? Assessable value plus basic customs duty plus social welfare surcharge, that comes to 10,000 plus 1,000 plus 100, that is 11,100 will be taken, or we need to compare it with GST on IGST on the transaction value. What is the transaction value of these goods? $12,000, $12,000, 11,100 or $12,000, whichever is higher, that should be taken. So, therefore, 11,000 or 12,000 will be 12,000, 12,000 into 12%, that will come to 1,440. This will be taken as the total customs duty payable. 1,440 plus 100 plus 1,000, that will be 2,540 will be taken as total customs duty payable, total customs duty payable. This is when if the warehouse goods are sold. Now, slight change. What if these goods are sold before depositing in the warehouse? Okay, then what would have happened? If Mr. A makes sale before deposit in the warehouse, by transferring documents to Mr. B for $12,000, then what would have happened? Again, who will pay the customs duty? Same, customs duty payable by Mr. B. What is the customs duty payable by Mr. B? Because Mr. B should file which bill of entry? Normal bill of entry. not ex-bond bill of entry, normal bill of entry. Why normal bill of entry? Boss, it is not deposited in warehouse, before warehouse itself, normal bill of entry he need to file. And what will be taken as the assessable value? How much will be taken as assessable value? $12,000. It is not $10,000. It is not $10,000. It is $12,000. Why? Because the last purchase price should be taken as the assessable value. The last purchase price will be taken as assessable value. So the assessable value will be $12,000, and based on that, basic customs duty, how much will be the basic customs duty? Basic customs duty at the rate of 10% on $12,000 will come to, so $1,200. Social welfare surcharge at the rate of 10% on $1,200, that comes to $120. And next we have IGST. Now we should compare, no, don't do the comparison, normal. IGST at the rate of 12% on normal you do, that is 12,000 plus, so 1,200 plus 120, okay. So total you take 12,000 plus 1,200 plus 120 into 12,000, 1,200, 120 into 12%, that will be 1,598.40. So total customs duty, let's round off to nearest 1 rupee. So 1,598 only, plus 120 plus 1,200, that will be 2,918 will be taken as the total customs duty payable. So completely it changed. The customs duty is increasing. Why customs duty is increasing from 2,540 to 2,918? Because the assessable value has changed. The assessable value itself has changed, so that has impacted. So that is the difference. What if? And in this case, whether A has to pay any any GST? No. Mr. A not required to pay any GST. Mr. A not required to pay any GST. Why not required to pay any GST? Because it is excluded from supply, 7 subsection 2. What about this case? Mr. A is required to pay any GST. Mr. A not required to pay GST, okay, because it is again excluded from supply. This is sale of warehoused goods. This is sale of warehoused goods under customs, which is PALD slow, in that slow W, and this is actually sale of goods on high seas, that is sale before import. Both case it is excluded from supply, due to that reason GST not payable. Now if Mr. A clears goods upon payment of customs duty, and then make sale to Mr. B for how much? For $12,000. Then what will happen to the customs duty payable, and who will pay customs duty? Of course, customs duty payable by Mr. A. Customs duty payable by Mr. A, because Mr. A is only filing the bill of entry, payable by Mr. A. What type of bill of entry? A normal bill of entry only will be filed. Normal bill of entry. And what is the assessable value in this case? Same, $10,000. Whatever is the price at which it is imported, that will only be taken, not $12,000, because A is only paying the customs duty. And what is the basic customs duty? Basic customs duty at the rate of 10%, that will be 1,000, and social welfare surcharge at the rate of 10%, that will be 100. And next we have IGST. IGST will be computed at the rate of 12% on what? 12% on 11,100. So 11,100 into 12%, that's it, 1,332. 1,332. If you do the total customs duty payable, what is the total customs duty payable? 1,332 plus 100 plus 1,000, that will be 2,432 will be taken as the total customs duty payable. So this total customs duty payable, if you see, 3 different answers we got. Here first we got 2,540, then 2,918, now 2,342. Whether Mr. A is required to pay GST? Of course yes. Mr. A required to pay GST on sale for $12,000. Okay, and of course this IGST 1332 is there now, that can be availed as ITC. This can be availed as ITC and utilized for payment of GST on this sale for $12,000. Okay, then next, in second case, after sale in high seas, if B places in warehouse, then also same treatment, he can deposit in the warehouse. But the problem is, once you file bill of entry, how can you deposit in the warehouse? Already normal bill of entry is filed, thereafter how the goods can be deposited in warehouse? There is nothing like that called, I will file bill of entry clear and you deposit, impossible. That is not called, that is called as a normal warehousing. You can take to any warehouse and you can keep it, but that is not coming under customs warehousing. So these are the three possibilities which are there. You don't put your mind and create any other possibility, these are only there, trust me. Then note 3, you can see, in case of warehoused goods sold by way of transfer of documents to title, IGST will be computed on this or sale value whichever is higher. Then note 4, where the basic customs duty is nil, social welfare surcharge is also nil as per CBI circular, of course, because social welfare surcharge will be 10% of basic customs duty, that's why. Then preferential rate will be under section 2 are those import which are made from a country in which India has trade agreement. And for computation of IGST, GST compensations, additional customs duties like safeguard duty, anti-dumping duty, anti-subsidy duty shall be included. So these are the three differences. Just now we did the working. So what is taken as assessable value under customs in case of sale of goods on high seas? What will be taken as assessable value? The last purchase price. And how it will be computed normally? Normally IGST will be computed, that is assessable value, basic customs duty, social welfare surcharge. Then next, sale of goods in warehouse. In that case what we need to do? So the assessable value will be original import price only. But for computation of IGST, we have a different treatment. What is that? Either we need to take the normal way, assessable value, basic customs duty, social welfare surcharge, etc., or the transaction value at which such sale happened, whichever is higher. The third case we have discussed. What is that? Sale of goods after clearance from warehouse. So assessable value will be original import price, and IGST also will be computed normally only. All these three cases we have just now discussed practically related to that, how the computation will be done. Then emergency powers of central government as per section 8 and 8A of Customs Tariff Act. So we have all import related details in first schedule to customs tariff, that is import tariff, and export related tariff is in second schedule, that is export tariff. In case of first schedule, they can increase only the customs duty, but they cannot bring a product into the levy of customs duty for import. But in case of export, they can bring a product into the levy of customs duty, or already existing product they can increase, but here only increase is possible, they cannot bring a product into this, and this can be done by way of notification in official gazette if the circumstances exist. So they don't have to do it in parliament. Usually rates related and all, they have to do it in the parliament only, that is Finance Act only they need to do. But in this case, in case of emergency situations, they can do that, but they cannot bring a product into the levy of customs duty on import. Next, we have these additional customs duties on import: safeguard duty, anti-subsidy duty, and anti-dumping duty. So break unit, break, required, not required, in a good flow it is going. We'll complete this chapter. Okay, say this. So safeguard duty, anti-subsidy duty, and anti-dumping duty. So safeguard duty in case of fair exports. Fair exports means what happened, and we had one protective duty that is now omitted. They have removed that protective duty completely, and we have only 3 additional customs duty. Safeguard duty when the goods are imported in large quantities. It is not the mistake of the exporter, it is a mistake of the importer only. So why the exporter needs to be penalized for that? So that's the reason why it is called as fair export made by the exporter. Whereas anti-subsidy duty is applicable in case when the country, foreign country, is giving subsidy to the exporter, and because of that subsidy the exporter is selling the goods to India at a lower rate, cheaper rate. So then in that case it is not a fair export, it is an unfair export, because the country, the foreign country, is giving a subsidy to the exporter. So this is an unfair export. So unfair export by who resorted to this unfair trade practice? By the exporting country, not exporter, exporting country. Had the exporting country not given the subsidy, he would not have sold it to India at a cheaper rate. Then in case of anti-dumping duty, when there will be anti-dumping duty, when the goods are imported at a cheaper rate and that is exported by the exporter at a price less than their selling price, then they are trying to do the dumping. It's a fair export or unfair export? Unfair export. Who is resorting to this unfair export? By the exporter, not the exporting country, exporter, unfair export by exporter. Safeguard duty, section 8B of Customs Tariff Act, anti-subsidy duty, section 9 of Customs Tariff Act, anti-dumping duty, section 9A of Customs Tariff Act. Who will be levying this? Levied by central government upon receipt of complaint or information. What is the relief that will be given against? Safeguard duty, relief against serious injury to domestic industry on account of imports in large quantities, because of import in large quantities. In all these cases there is a serious injury to the domestic industry, but on account of what reason it changes. So first one, because of large quantities. Second, serious injury to domestic industry on account of subsidy enjoyed in export pricing. So they have, that is foreign country has given some subsidy for, and because of that subsidy it is being imported into India at a lesser rate. Okay. Then third one, serious injury to domestic industry on account of import of goods at a cheaper price. Cheaper price means what? At a price less than their selling price. Whose selling price? Exporter selling price. Then it will be, anti-dumping duty. And extent of relief. Safeguard duty is to the extent adequate to prevent remedy. So usually the rate will be specified in the question. We need to take that rate and we need to go by that. Whereas anti-subsidy duty also same, to the extent of subsidy allowed in the export price, that is also a percentage given in the question. Take that percentage and do the computation. Whereas this anti-dumping duty is lower of dumping margin or injury margin. Who is dumping? The exporter is dumping. So what is the dumping margin? The price at which he is selling in his country minus the price at which he is exporting to India. So normal selling price in exporter's country minus the price at which they are exporting to India, that is the dumping margin. Whereas injury margin means, so here who is getting injured? The domestic manufacturer is getting injured. So the normal selling price at which the product is sold in India minus the landed value of the imported goods. What should be taken as the landed value? Assessable value plus basic customs duty plus social welfare surcharge. These three things should be taken as the landed value. So that will be taken as the margin, and whichever is lower will be taken as anti-dumping duty. Investigation, yes. All these three cases investigation is required, and provisional duty, until completion of investigation they will be levying some provisional duty. What is the duration of provisional levy? In case of safeguard duty, means provisional, why? Because they need to do investigation. When they will initiate it? Levied by central government upon receipt of complaint or information. From whom? From the domestic industry. Immediately they cannot act. So for that reason they need to do investigation. Until that point of time they can levy provisionally. For how many days they will levy provisionally? If it is first one, 200 days, that is safeguard duty. Next 4 months, that is anti-subsidy duty. Finally anti-dumping duty, 6 months. And what will happen upon finalization? Finalization, there could be two possibilities. Suppose they are telling the final amount that you need to pay is more than the provisional amount. So then the differential amount we need to pay. Suppose if we have paid the excess amount, that we will get as a refund. Refund allowed or differential duty will be payable. What is the duration of levy? So in case of safeguard duty, as it is a fair export, maximum for 10 years. It can be levied for 4 years. It can be further extended for a period not exceeding 6 years. So in total it should be 10 years. But the next two is unfair export. Due to that reason there is no time limit. It can be extended for any unlimited time. 5 years plus 5 years at a time after review. So maximum unlimited time. Both points same. And protective duty stands omitted, that is the only amendment in customs. Then exemption from levy. In case of safeguard duty, we have few exemptions. Point number 1, if import by 100% EOU or SEZ, then there is nothing. This point is common for all the three. If you observe, all the three it is common. However, it is cleared from EOU or SEZ to DTA, then we need to pay. Logically, any goods which are imported by EOU or SEZ is exempt from payment of customs duty. We don't have to pay customs duty. So total customs duty includes even safeguard duty, anti-dumping duty, anti-subsidy duty. However, if you try to divert this by way of import into EOU, SEZ and then sell to domestic tariff area, then we end up paying the customs duty, that is this. So therefore, however, it should not be cleared to DTA from there. Second exemption. First exemption is import by 100% EOU or SEZ. Second exemption, if the goods are imported from a developing country means only one developing country, and we are not importing from other developing countries, we are importing only from one developing country and rest of the imports are from developed countries. Now you see what is the percentage of import from this developing country to total. If it is less than or equal to 3%, then on that import from developing country only safeguard duty is not payable. So in that article into India is 3%, so long as the percentage of imports of that article into India is 3% of the total imports of that article. 3% means what? Here what we need to understand, less than or equals to 3%, less than or equals to 3% of the total imports of that article into India. Then next, article originating from more than one developing country. This is like more than one developing country, so not from one country, more than one developing country. So long as the import from developing country with less than 3% taken together. Say for example, we are importing from 10 developing countries and developed countries. Take this 10 developing countries, see each and every country to total, and if it is less than 3%, you group that. Say for example, 4 countries are less than 3%, less than, not equal to, less than. You group that. In that group, if you see the total, if the total does not exceed 9%, that is less than or equals to 9%, on that group there won't be any safeguard duty. So long as the aggregate of the imports from developing country with less than 3% share taken together does not exceed 9% of the total imports of that article into India. So here it should be less than or equals to 9%. So above case it is less than or equals to 3%. Here it is less than or equals to 9% of the total imports, okay, of that article into India. And while taking, only less than 3% should be taken together as a group. Say for example, A, B, C, D and others. So A, B, C, D is like, so developing countries, and this is like developed countries. Now we need to see the share. Say for example, 2.8% and 2%, 3.5%, and D will be 1.5%, and remaining out of 100 minus 2.8 to 3.5, then 1.5, that is 90.2% is others. Now tell me, in which case there will be safeguard duty? Definitely on import from others there is safeguard duty, correct? Safeguard duty will be applicable. Even on country C also safeguard duty will be applicable. Now you need to take these A, B and D together. What is this A, B and D together? A, B, D and together it is 6.3%, which does not exceed 9%. So therefore safeguard duty or no safeguard duty? No safeguard duty, okay. So we are importing from 4 developing countries A, B, C, D, and developed countries others. Developed country 90.2, always safeguard duty will be applicable, whereas in this developing also you see any country with more than 3% or equals to 3%, definitely safeguard duty applicable. You just group it which is less than 3% taken together, that is less than 3% taken together, it does not exceed 9%, so safeguard duty will not be applicable in this case. Is that clear? Then next, so these are the points, and one more point we have, that is number 4, import from specified countries. If imported from some notified countries, that will be given in the question itself, then also there is no safeguard duty. These are the 4 relaxations for safeguard duty. One EOU/SEZ, second one that one developing country, next one all developing, more than one developing country, and finally import from specified countries. Whereas here also we have 4. Here also other 2 cases also we have 4 points. First point same, that is import by 100% EOU or SEZ, however it is clear to DTA, then they need to pay. If such articles are exempted in exporting country, in that country itself it is exempted, then in that case we don't have to pay any duty, because those articles are exempted in that particular country. When you are importing that, we don't have to. So exemption is something which is every country will be giving, that's normal, that cannot be called as unfair. That cannot be called as unfair, because it is a fair. Exemption is something which the country will give. So why are you calling it as unfair? It's fair only if exports are exempted in the exporting country. Imports from member country of WTO. So unless it is needs to be levied, prima facie it cannot be levied. So because they are member countries, unless there is a serious injury, and that is only after carrying out investigation they can levy, otherwise they should not levy. Import from specified countries, okay. So here import from member country of WTO in brackets write down, unless there is serious injury, unless there is serious injury, not threat, serious injury, really there should be injury, means only after investigation it can be levied in case of import from member countries, but in case of specified countries always no anti-dumping duty or no anti-subsidy duty. Then next, retrospective levy. Can they levy it retrospectively? Yes, up to 90 days prior, only these two, but not safeguard duty. Safeguard duty cannot be levied retrospectively, these two only, up to 90 days before the date of notification. And say this can be levied for a period of 5 years, these two you see, anti-dumping duty and anti-subsidy duty can be levied for a period of 5 years plus 5 years at a time after review, means every 5 years they need to do the review. Say for example 5 years over, they could not do the review, can they extend it? Yes, they can extend it, automatically it will be extended by 1 year if not decided whether to extend or not within the expiry of 5 years, and thereafter in that 1 year they need to decide, if not it will be end, the notification will be end, otherwise it can be extended. And in case of imports in large quantities, government can also resort to tariff rate quota model. Tariff rate quota model is like, for every person they will be giving a quota, this much only you can import, and beyond that if you are importing you need to pay some additional duty, like that they can bring in, okay. That is tariff rate quota, fixing the maximum quantity of imports as a safeguard measure instead of safeguard duty. So that is also like all the safeguard duty provisions are applicable to the tariff rate quota model also. Then anti-subsidy duty and anti-dumping duty is mutually exclusive, means if anti-subsidy duty is there itself they are already giving a duty to make the price equal, so again on the top of that anti-dumping duty will not come, so that's why these two are mutually exclusive. In case of anti-dumping duty, if sale price in exporting country is not available, because if you see dumping margin is the sale price in exporting country minus the price at which it is exported to India. What if they are not selling in their country? If they are not selling in their country, we need to see at the price at which they are exporting to a third country. So the export price to a third country should be taken, and if that is also not available, then we need to determine cost of production plus usual profit margin in that exporter's country. So this, in case of anti-dumping duty, if sale price in exporting country is not available, the export price to third country is considered. Already they tested this in one attempt, okay, already they tested, but another point they have not yet tested, they can ask this now. In the absence of export price to the third country, then cost of production to exporters and usual profit margin is relevant. Then there is something called as circumvention of anti-subsidy duty and anti-dumping duty. Circumvention means what? Escaping from it. How can we escape? By changing the name and description. So for example, import of product A attracts anti-dumping duty. So what we will do, we will change the name to product B or change the description, so that we will escape from payment of anti-dumping or anti-subsidy duty. Then number 2, so bringing it in unassembled or disassembled condition. So only when you import in finished product condition you need to pay. So we will import it in unassembled condition in multiple ports. So one part will be imported in one port, and thereafter we take the clearance and then we will merge. So that is called as import in unassembled form or disassembled form. That is also one way you can escape. And changing the country of origin. For example, import from China attracts anti-subsidy duty. From China it will go to Singapore or Malaysia, and from Malaysia we will import, and we will tell that so we are importing from Singapore or Malaysia, so that we will not pay the anti-dumping duty or subsidy duty. In that case, when any person tries to circumvent this, they will not again carry investigation, go to parliament and come out with a new notification. The same existing notification can be made applicable to these goods for which you have altered, these goods for which you have changed the country of origin, these goods which are imported in unassembled or disassembled form. Is it clear? See there, where the central government on such inquiry as it considers necessary is of the opinion that the circumvention has taken place, anti-dumping duty circumvention has taken place, number 1, either by altering the description or name, then imported in unassembled or disassembled, or changing the country of origin, or any other manner, they may extend the anti-dumping duty, anti-subsidy duties to such other articles also. Absorption of ASD, ADD. Absorption is said to take place when the exporter offers a discount in order to compensate the ADD or ASD. Here there is some ADD, ASD already levied, because of which the price increases, and when the import price increases, so then the local market price also, the import price also same, then no one will import. For that reason, what exporter is doing, he is giving a further discount. He is giving a further discount to capture the customs duty, anti-dumping duty or anti-subsidy duty that is levied here. For that reason, it is called as absorption of anti-dumping duty or anti-subsidy duty. Whenever government, central government is of the opinion that exporter has unnecessarily reduced the export price in order to absorb the effect of this anti-dumping duty or anti-subsidy duty without commensurate value addition. There is no real value addition, the same product, but they have reduced the export price. Then they can revise the anti-dumping duty to whatever extent that idiot has reduced. Say $10 he reduced means here they can increase it by $10, so that they want to maintain that price. Okay, so see there. First, absorption, when it will happen, these two are theory. These two are theory questions only. Theory in the sense not direct theory, application based theory questions they will be asking. Absorption of anti-dumping duty is said to take place if there is a decrease in the export price of an article without any commensurate change in the cost of production. Just underline decrease in the export price, decrease in the export price of an article. Then where the central government is of the opinion that absorption has taken place whereby anti-dumping duty so imposed is rendered ineffective, it may modify such duty to counter the effect of such absorption from such date not earlier than the date of initiation of inquiry as the government may by notification specify. Then next, this is the format of computation of customs duty in case of import. First you need to take assessable value. Assessable value will be 15 lakhs. Total 9 different customs duties we have. We divide it into 3 steps. Step 1. In step 1 we have first 3. First step 3. What is that? Basic customs duty, social welfare surcharge, CVD. CVD applicable only for 3 goods. Alcoholic liquor for human consumption, petroleum products, tobacco and tobacco products. Basic customs duty 10%, that will be given in the question. It will be on assessable value. Assessable value 15 lakhs into 10%, that will be 15,000. Then social welfare surcharge will be 15,000 into 10%, 1,500. Then CVD will be computed at the rate of 12.5%. That is also given. That is also given on what? On basic assessable value, basic customs duty, social welfare surcharge. Remember that in mind. So CVD will be computed on what? Assessable value, basic customs duty, social welfare surcharge. Only if given in the question we need to do that. And the sum of these 3 will be taken as customs duty exclusive of additional customs duties. Then step 2. In step 2 we are taking 3 additional customs duties. Just now we saw safeguard duty, anti-dumping duty and anti-subsidy duty. Safeguard duty and anti-subsidy duty will be computed at the rate given on what? Assessable value or landed value. Landed value is assessable value, basic customs duty, social welfare surcharge. And in case when they give only the rate without mentioning assessable value or landed value, which should be taken, we need to take assessable value only. That's an assumption. Okay. If you see at the end of this book I have given, beginning of this book and the end of this book I have given important assumptions should be taken while solving the questions. In that list of assumptions I have clearly listed out that while computing anti-subsidy duty and anti-dumping duty, what is the assumption number? 24, assumption number 24. In that assumption number 24 I have given while computing anti-dumping duty or anti-subsidy duty. So we need to take assessable value when the question is silent about which value to be taken, because that's what many times ICA has taken in many past exam questions for that reason. So these are the assumptions which you need to follow, because these assumptions are based on solving many questions. All past exam etc. when there are different treatments, ICI will follow one treatment. So that treatment related assumption only I have given there. Okay. Now next, so we need to take anti-dumping duty, which is lower of dumping margin or injury margin. So that we will take, when you add all these 3, we will get customs duty exclusive of IGST and compensation cess. Then step number 3. In step number 3 we need to take only IGST, GST compensation cess and SAD. IGST will be at what rate? Will be at the rate of 12%. That should be given in the question itself. On what? On assessable value. Whatever assessable value plus everything up to step 2. That is 16,500. What is assessable value? 15 lakhs. 15 lakhs plus 16,500 into 12%, okay, 15 lakhs only na, yes, 1,50,000. Assessable value is not actually 15 lakhs, it is 1,50,000, because if you see the basic customs duty is computed as 15,000, so 1,50,000, 1,50,000 plus 16,500 on the 12%, that comes to 19,980, and compensations will also be computed the same way, and SAD also will be computed the same way, but SAD is applicable right now only for petroleum products. Now when you add all these things, that will be called as the total customs duty payable. Can this IGST be taken as ITC? Yes. But compensation cess can be taken as ITC? Yes. So can be availed as ITC. This IGST can be availed as input tax credit. What about this compensation cess? Compensation cess also can be availed as ITC if there is compensation cess on output liability. Is it clear? So can be availed as ITC if, can be availed as ITC if cess is in gross liability. If cess is in gross liability, means on my outward supply also I need to pay GST, then I can take ITC on my inward supply, that is in this case compensation cess, because compensation cess can be utilized only for payment of compensation cess on output tax, okay, or output liability. Then next, that is with respect to this, then agriculture and infrastructure development cess, like that one additional cess is there. It is levied only on specified goods, that is apples, chenna, etc. at notified rate. It will be given in the question. When they give, what you need to do? We need to take it on assessable value, always on assessable value, and it will be computed where? Where is it computed? Part 1. So along with this basic customs duty, social welfare surcharge itself, in the block 1 itself we need to include AIDC. You can see there, and which is part of block 1. Block 1, which is that block 1, first step we saw na, that block 1 in computation of customs duty. For safeguard duty, compute on assessable value if question is silent. Already I told you this point. So with this we completed customs duties, types of customs duties. So 3 chapters we have discussed: taxable event, exemptions, classification of goods, and computation of customs duty. We will take a small break and then we will continue with the valuation, okay, which is a very important area. We will meet after 15 minutes.